Well, because the only way around that is if the Fed slashes interest rates. But what if they can't? What if they have to keep rates where they are? The government must default. There is no way that it can afford to make these payments because the Fed would have to print so much money to monetize that debt that it would create so much inflation that it would push interest rates even higher.
Welcome back to a jaw-dropping episode with Peter Schiff. Brace yourself as we dive into the alarming reality of the U.S. national debt, now soaring past $32.7 trillion and skyrocketing by trillions every year. Can you believe that we're spending more on interest payments than on national defense? Today, Peter exposes the shocking truth. Interest on our national debt is now the third largest budget item, and it's growing at a terrifying pace. What happens when these payments surpass our tax revenues? Are we heading for an inevitable government default? Stay tuned as Peter unpacks this financial time bomb and reveals what it means for all of us.
So we have a $32.7 trillion national debt, which is rising by trillions of dollars a year. As of today, interest on the national debt is now the third biggest line item in the budget. So number one is Medicare, then Social Security, then interest on the debt, then national defense. We're actually spending more to pay interest on the money we borrowed than we're spending on defense. And of course, I think we're spending too much on defense. I think we should spend less, but we're spending more on interest. But here is the real problem. That number keeps growing. A couple of years ago, interest on the national debt was $300 billion a year. Now it's over $700 billion. By the end of the year, it'll be $1 trillion. By the end of next year, it'll be $2 trillion. In three or four years, the U.S. government will be paying more in interest on the national debt than it collects in taxes. So, I mean, this is impossible. Well, because the only way around that is if the Fed slashes interest rates. But what if they can't? What if they have to keep rates where they are? The government must default. There is no way that it can afford to make these payments because the Fed would have to print so much money to monetize that debt that it would create so much inflation that it would push interest rates even higher. Because the more inflation there is, the less private sector demand there is for government debt. But the more money the Fed prints to prevent interest rates from rising, the more inflation they create and the less attractive the government debt becomes. And now the Fed is the only buyer of treasuries. But now it's not just treasuries. What about municipal debt? What about all these municipalities and states that loaded up on debt? What's going to happen when it matures and they have to roll it over at much higher rates? What about all these corporations that borrowed a bunch of money to buy back their own stock? What's going to happen when that debt matures and now they have to try to refinance it and the rates have tripled or quadrupled for them? Everybody is going to collapse. Look, the problem is we need higher interest rates. Higher interest rates is what is part of the cure, but it's also what's going to kill the current economy. You can't get rates from where they are now to where they need to be without a collapse. It's like you can't make an omelet without breaking eggs. Well, we're going to break a hell of a lot of eggs because of how much debt we have. Why do we have so much debt? Because we had 20 years of artificially low interest rates, of punishing people who saved and rewarding people who borrowed. And so the whole economy is screwed up. We can't unscramble this egg. It's going to be bad. But I think that because it's going to be so bad, the Fed is going to choose what it perceives to be the lesser of the two evils. It will choose inflation over collapse, depression, financial crisis, bankruptcy. That's why I'm convinced that my portfolios are the correct approach.
Do you know that the United States has only one nickel mine? We import almost all the nickel we use, and that is risky. Earlier, the United States did not know what nickel would mean in the future. That's because no one had the idea of green energy and electric vehicles in which nickel is the main component. After all, nickel is used in batteries, making them more energy dense, giving longer range. The United States chose to outsource nickel production, relying on globalization. But now, the hard reality is, no country can depend entirely on globalization, because countries like China, Russia, and their allies are determined to break the world order, which is mainly driven by the United States, having globalization at its center. Not only that, but demand for nickel has increased to a historic level due to electric vehicles and clean energy. Elon Musk said nickel is his biggest concern in scaling lithium-ion battery production. That's why he asked miners to mine more nickel, without which green energy storage is not possible. However, S&P Global Intelligence says nickel is difficult to find and discover. And as of now, there are not enough nickel mines in the free trade countries of the world, even if we ignore mine scarcity in the United States. So, what does it mean? Well, at any moment, the United States could have a severely reduced nickel supply. The single mine in the U.S. has limited capability and is scheduled to run out of ore soon.
And the project deserves that kind of approach. It's not a go slow thing. America needs nickel. That much is very clear. And, we've got it, but we've got to prove it too. Have a quite high confidence level that is there based on this historic drilling, but we've got to drill it off at 300 meters to be able to say that with geologic confidence and in keeping with the 43-101 regulations.
But what if a nickel mining company can capitalize on this and use it as leverage? Well, Alaska Energy Metals, being traded under the ticker AKEMF, is the leader in this. And what if you would invest in this company? But no, before doing so, you have to know some truths that will make you wonder why you did not come to know about this company before. You should know that there's another nickel company, Cobalt Metals, that has some heavy hitter investors, like Jeff Bezos, Richard Branson, Ray Dalio, Bill Gates, and others. This company uses the most cutting-edge AI to find nickel. And guess what? Their algorithm identified the Nikolai project area as being prospective for nickel mineralization, exactly where Alaska Energy Metals property is. So, Cobalt picked up a massive piece of land, right next to Alaska Energy Metals' Nikolai project. Alaska Energy Metals has an extensive data set which partly covered Cobalt's claims. Guess who bought the data? Yeah, Cobalt bought data from Alaska Energy Metals. Listen to what the CEO of the project said.
This is the project that brought me to Alaska in 1995. My first career as a young geologist was with Inco, and they had moved me all around North America, and I learned a lot, but they moved me here to be exploration manager and to focus on this project, which the global targeting team had identified as having similar geologic and geochemical characteristics to the Norilsk area of Russia, which of course is probably the largest accumulation of nickel sulfide deposits on Earth.
Now, you might think that this will make Alaska Energy Metals shares expensive and unreachable for ordinary investors. Well, luckily, that's not the case. The price the CEO negotiated for this property is literally the deal of the century. The previous owner of the property, which is now controlled by Alaska Energy Metals, spent $30 million on drilling and other exploration efforts to define the nickel in the ground. But the CEO of Alaska Energy Metals, Gregory Beischer, bought the data and the land package for only $1.8 million. That's 95% off. Listen to what the CEO said.
I saw the claims come open in around 2018, didn't move immediately on it, but after a while, I saw that these lower grade disseminated sulfide deposits really might be the next generation of nickel deposits that our industry has to mine to meet what appears to be a surging demand. So we jumped on it. And so it was kind of full circle for me. The project that brought me to Alaska, I'm on it again. And the intervening 25 years, I've explored all over this great state.
As of now, the market cap of the company is only $14 million, which is so undervalued. Similar companies that are a little more advanced have a market cap between $100 to $180 million. Just for comparison, Alaska Energy Metals owns a nickel resource containing 8 billion pounds of nickel, and its market cap is $14 million. However, Canada Nickel owns a resource of 13 billion pounds of nickel and has a market cap of $180 million. So, yeah, there is that. This means that no matter what, the market cap will reach its normal level. We can see the potential for Alaska Energy Metals market cap to rise up closer to its direct peers, rising from $20 million to $100 million and beyond. And those who would have invested in the company at these low share price levels could see their stock prices swell as the company advances the project with it. And guess what? The company is actively working on defining the resource, which means that the biggest single catalyst for shareholder value creation is imminent. Listen to what the company's CEO said.
Well, our main focus is the Nikolai project in central Alaska, where from historical drilling, it looks like there should be a very large deposit of nickel with accessory cobalt, copper, chrome, and platinum group elements. And I've known about the project a long time, and I've decided that our company will focus on this project, and we're drilling off. We've done the drilling this summer and should be in a position to announce our first resource quite soon. And I think it's going to open some eyes. People are going to realize this could be a really large accumulation of nickel metal.
That's why we believe that Lior's investment partnership is going to be taking a position in the company. And guess what? Before Lior buys shares and skyrockets prices, you have the chance to buy at the cheapest possible price of 0.10 in the US, 14 cents on the Canadian market. But we personally don't trust any project without seeing its team and leadership. And surprisingly, the team behind Alaska Energy Metals is robust, with Gregory Beischer as its CEO, president, and director. Earlier, he founded Millrock Resources, leading a team that built a successful project generator company, attracting over $50 million in capital. And just recently, Mario Vetro joined the board of directors. He earlier co-founded K92 Mining, which employs 1,600 people in Papua New Guinea, where the company produces high-grade, low-cost gold and trades at nearly a $2 billion market cap. He brought with him Ian Stalker, who was CEO of K92 Mining, to the team. So yeah, the team is an expert in what they are doing, and they have a track record of scaling companies like Alaska Energy Metals.
Just be in real assets, be out of the dollar, be in precious metals, be prepared to avoid the inflation tax, because that's the tax that's going to clobber everybody. Well, I've sounded the alarm in the past. I thought that, the problem was more imminent in 2008 and 9, and they pulled a few rabbits out of the hat. We really bought a lot of time. When I was warning about the financial crisis back in 2002 and 3, my first book, Crash Proof: How to Profit from the Coming Economic Collapse, came out in February of 07. And so when I was writing that book, in fact, that book was initially going to be something like The American Nightmare. It was going to be about real estate and why real estate was going to crash and all that. But I didn't think that book had broad enough appeal. So I made a more, a broader book about the economy in general, and real estate was, a part of it. There was a, chapter on the real estate bubble and how the government inflated it. But back then, I thought that if we did what I thought we were going to do, which we ended up doing, I predicted quantitative easing before they even came up with the word. Right? I knew what they were going to do. I just didn't know what they were going to call it until they did it. But I wouldn't have thought back then, and I didn't think back then, that we would be here in 2023 and they would have been able to run up the debt to 32 trillion, and they would have been able to keep interest rates as low as they did for as long as they did. So that already surprised me. But because they succeeded in doing that, they just made the problems that I was worried about back then so much worse. And so now I think, we're pretty much run out of time. We're literally living on borrowed time. So, any day, I just think any day you go to sleep, you could wake up and it could be a whole new world. And that's why, you got to be prepared. I know that I'm not going to wake up to that disaster financially. It could be bad, just as an American. But as an investor, I think I'm prepared. And I think our fate will likely be sealed in the foreign markets. It's going to be our creditors. During the debt ceiling debate, right? And we keep saying we got to raise the debt ceiling, right? We have to raise the debt ceiling so we can keep borrowing, right? And if we can't keep borrowing, we're going to default, which is an admission, right? That we're running a Ponzi scheme. I used to joke, in fact, you can see my stand-up routine on YouTube if you Google, if you YouTube Peter Schiff stand-up. But I used to tell this joke. I used to get a lot of laughs. But back in the Bernie Madoff days, when Bernie Madoff, when they were first talking to him, the New York Times, did an article, and Bernie Madoff said, look, the the U.S. government's running the biggest Ponzi scheme ever. I mean, I'm a piker compared to the government, right? And so people would say, well, who cares what Bernie Madoff says, right? He doesn't have any credibility. He's a criminal. And what I used to say back then was, well, he's got credibility in one area, and that's Ponzi schemes, right? He knows one when he sees one. And if Bernie Madoff says the U.S. government is running a Ponzi scheme, he ought to know. And then I used to joke and I said, you know, instead of putting him in jail, we should make him Secretary of the Treasury, because he would do a much better job of running the scheme, because I pointed out that you had secretaries of the Treasury, like current Janet Yellen. She comes out and says, hey, if we don't raise the debt ceiling, we're going to default. That's an admission it's a Ponzi scheme. Janet Yellen didn't say, if we don't raise the debt ceiling, we're going to raise taxes so we can pay our bills. We're going to cut Social Security so we can pay our bills. No, if we don't raise the debt ceiling, we're going to stop paying our bills, right? That's why I would get a laugh. They say we have to raise the debt ceiling so we pay our bills, or so America always pays its bills. No. We need to raise the debt ceiling to continue not paying our bills. The reason we have a stack of $32 trillion of unpaid bills is because we don't pay them. We go deeper into debt. And so I used to joke and I said, you know, it's Ponzi 101. When you're running a Ponzi scheme, you keep it quiet. You don't tell the people that you're running a Ponzi scheme. So at least we could have bluffed and pretended that no matter what, we're going to pay. No, we told everybody that the only way America is going to pay its bills is if we can find some other sucker who will lend us the money. But at the minute we run out of suckers and we can't borrow, well, you're SOL. That's basically what they admitted. So yeah, I mean, it's a gigantic Ponzi scheme, and I think the Fed is going to, you know, try to prevent the government from defaulting by buying those bonds and printing the money, and that means the default takes the form of depreciation of the currency.
Thanks for watching this critical episode with Peter Schiff. The exploding national debt and escalating interest payments are pushing us toward an economic disaster. If this revelation stunned you, smash that like button and subscribe for more hard-hitting insights. Share your thoughts and questions in the comments. We need to hear from you. Stay alert, stay engaged, and we'll catch you in the next eye-opening episode.